It's Friday the 16th of September. Thank you for joining us this morning here on Morning Markets. In terms of global stock markets, outside of the US, they fared well in sterling terms. Here in the UK, the largest 100 companies who generate around 70% of their earnings overseas benefited from a weaker pound relative to the US dollar and to the euro primarily. The weaker pound also led to positive returns for sterling or UK investors from Europe, Japan and the emerging markets due to that translation effect of the currency. The US stock market was softer after we had data published in the US demonstrating strength in the labour market, but also strength in the consumer and their appetite and their ability to get out there and spend in retail stores. This presents a challenge to the Federal Reserve, who are essentially trying to cool that aspect of the economy. They're trying to cool and moderate inflation at this point in time by moderating demand. Higher interest rates are one of the key tools which they are using in that monetary policy tightening. Higher interest rates impact the valuation which analysts place on companies. The higher the rate, the bigger the discount which they apply to the value of projected or forward-looking company earnings, hence why you get that impact in the stock market. At this stage, the primary expectation is for a 0.75% increase in interest rates in the US next week. However, that level is moving in terms of the discussion. It could potentially be even higher. Within the US, technology and consumer discretionary companies, which are generally viewed as more expensive style companies, were more sensitive to that higher interest rate prospect as discussed yesterday. This expectation of a tighter monetary policy, so higher interest rates to cool demand, also led to a strengthening of the US dollar, but also a weakening of the oil price, given the prospect that they're seeking to cool demand and cool growth. This led to some, or just to provide some context in terms of the data prints coming out of the US, I mentioned the labour markets and the strength which we've seen there, which is an area we've been discussing over the last few weeks and months here on Morning Markets. But for context, the number of American citizens filing for unemployment support for the first time continue to trend down. There were 213,000 American citizens filing last week relative to the expectation of 226,000. The fact that we are not seeing a demonstrable cooling of the labour market is giving the Federal Reserve a challenge to contend with. A strong labour market is supporting the consumer's ability to get out there and spend. And to give you some context to consumer spending, the retail sales, it was evident from the retail sales yesterday that demand is very much in place. In August, retail sales spending increased by 0.3% over the month. The fact that you've got around 96% of the available labour force in work is supporting that ability to spend, but also lower gasoline prices in the US freed up some money to get out there and spend in bars, in restaurants and in stores. Here in the UK, data reported this morning is demonstrating and reflecting the challenge which we are very well versed in terms of higher energy and cost of living prices. Retail sales in that regard moderated by 1.6% over the month in August. So you've got a bit of a contrast there to what we're seeing between the UK and the US, and energy prices are a key component of that. Thank you very much for watching. We look forward to bringing you up to date next week here on Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.